It is proving to be a very interesting times at present for the commodities across energy, base metals and also the precious metals here. Again, the gold prices, they have moved higher. The base metals again came under some pressure, but there's still that also was basically was being contributed by a mild recovery in the dollar here. In terms of oil prices, again, it's basically that has been trading higher. So again, it's looking quite good for the oil prices in terms actually they have not trended further lower here. The WTI again basically is holding out around $62 here, and also the Brent basically has inched higher here. So again, what it means in terms of what are the strategies or what is happening in the global markets right now in commodities, let's try and understand those with our guest today, Vijay Bhambwani, author and CEO of bsplindia.com. He joins us live in the studio, and David Lennox, the resource analyst at Fat Profits, he joins us live from Sydney here. Welcome to the show, gentlemen. David, first of all, let me actually go across to you and ask basically what is happening right now in the metal market. It appears that across metals, energy, again, there has been a buoyancy, and it doesn't appear that we actually are seeing a cool off very soon right now.
Oh no, certainly there hasn't been. Yes, we did see risk-off trades occurring through the course of the last couple of weeks as the equity markets made a correction. But the markets are now starting to look behind at what's happening in the equities and are looking at a synchronized global growth, and also the fact that we aren't going to see rampant inflation throughout the course of 2018 or rampant high interest rates. So when you add all that up, it does mean that growth will remain throughout the course of 2018, and that's really what's driving the current strength in commodity prices. Throw in the fact that we have had a supportive US dollar over the course of 2018, and that's just added some tailwinds to that price momentum.
Right. So, Vijay, coming to you, basically, the question here is that at present, on one side, again, we have been talking about much higher inflation, and then also basically the question here was that on US side, again, the inflation number came up, and then European side, we've been talking that perhaps inflation outlook is improving. On Indian side, again, there is some sort of resurgence in inflation. So what do you make out in the context of the changing sort of economic landscape and also the commodities demand here?
Good afternoon, Piyush. Thanks for having me on your show. Now, what I have been saying consistently since the last 4 or 5 months that I have been on your channel is that crude oil prices are likely to head higher. Now, take crude oil higher and you're triggering inflation. Along with crude oil, you're seeing industrials, which is base metals, which are also going up in tandem. So, your general inflation, and crude has a multiplier effect on inflation across the board, is likely to go up. And specific inflation in raw material costs of corporates, which are cyclicals, are likely to see pressure on margins because you have iron ore, steel, nickel, aluminium, copper, lead, zinc, all staying firm. So, of course, CPI and WPI inflation looks like it's headed higher.
Right, and also Vijay, then in that scenario, like what's your own perception? I'm trying to ask about the oil prices also here, is that we have seen again the rig count has increased, oil production has increased in the US markets, and if I look at the seasonal softness here, that actually the oil price is not telling you, and there is no major sort of unwinding happening in the hedge fund positions also here. Does that tell you that perhaps we actually have a range quite fixed here with 58 to 60 as a good sort of bottom support for WTI, and broadly the market is looking towards higher levels again, or maybe a range of 58 to 70, 75? Is that something we are working with, or you think that perhaps we could be going much higher?
Well, Piyush, my logic for higher crude oil prices has been that America, which was so far a net importer of crude oil, is now turning into a net exporter. So earlier Americans wanted lower crude oil prices, now they are seeking higher prices. Then you have the Saudi Aramco Ipo, which is weighing on the Saudi fiscal balance sheet. So the only way the Saudi Aramco Ipo, which is the biggest in human history, can pass through is if crude oil prices were to remain firm, which is why you have the Saudis having an oil cut kind of a agreement with the Russians, who in turn have similar agreements with Iran. So you're likely to see crude oil prices getting bought into every time there's a decline. Let's see what happened midweek last week. You saw crude oil prices coming down sharply from 61 odd on the WTI, coming all the way down to 58.5, but lo and behold, next day itself you're back above 61. So you're likely to see these kind of buying momentum coming in every time you see crude oil prices dip. So I would sort of concur with you that $57, $58 to a barrel on WTI would act as a rough and ready support. On the upside, I think you can very safely hazard a 5 to 7% upside from here, probably in the next few weeks itself. Now, whether it will go to 75 odd levels in the absolute near term, I think that's a little stretched, but give it time, and I'm talking about more of 2 quarters plus. I think that's a possibility one cannot really write off at this point in time.
Right. So again, if I'm reading the numbers here, it means that 50 to 60, 58 to 60, again, that actually is providing a support, and 5 to 7% from here implies we're talking about 66 to 68, which means a $10 range. Actually, you are working with WTI right now. So that's actually the crude range. David, coming to you. Now, if I take a 5 to 6 month outlook, last 5 or 6 months, again, the positions have been very bullish. Now, if I take the last 2 or 3 weeks here, there has been a mild cut in terms of the long position, the Brent futures here. But do you believe that what we are seeing in terms of the freight sort of movements, in terms of trade lanes, again, where the freight rates actually have increased a lot, what's your perception of the demand right now in terms of oil prices, in terms of natural gas prices? LNG prices have also actually gone to the roof here, more than $10 per barrel. So broadly, what's your sense around the pricing here?
Look, certainly you've got to be cautious because we are now in the northern winter, which is the slower part of the season for demand for energy products. We will be very shortly, obviously, moving into their spring and then into their winter, into their summer, and that will bring about, we think, a surge in demand, especially so in the US, where we have seen confidence from US consumers continuing to remain quite high. And of course, growth inside the US continues to also remain very firm. So they are the 2 drivers that will drive demand come the summer. And we think that's certainly going to play very well for the demand equation. When you throw in the fact that China will continue to import considerable quantities of oil, and also now we're looking at Europe joining in terms of their growth aspirations, we think that demand is going to be well set for 2018, and that's going to add very good support to the crude prices for the rest of this year.
Right. And David, if I just want to ask you, basically, do you expect any sort of conflict arising in the Middle East? Like the recent one, Israel, Iran, again, some sort of basically tensions, the word battles there, any sort of those sort of escalations, basically, are you expecting, or broadly not much in terms of whatever we are seeing from Saudi, around Yemen, around that part, only that should be perhaps persisting here?
Unfortunately, the region has a history of wars, and we've seen them come and go, but the oil supply still continues to go on. And we would suspect that if there is any major geopolitical events, certainly if it's only between Israel and, say, on the Syrian borders, that's going to have somewhat of an impact, but not a major impact on supply. So we would expect to see spiking if that occurred. Otherwise, we're not really looking for any uplift in geopolitical tensions in the region, apart from what we're already aware of. And of course, if that does happen, that will be a very strong tailwind for the oil price, and we would see, depending on the type and nature of the geopolitical event, we would see oil prices certainly running very hard to the upside.
Right. So that's actually the word and the view on the oil prices here. And Vijay, very quickly, if I just want to ask in one line here for our viewers, when do you expect the Aramco Ipo to actually come? If you're looking at the oil curve here, should that be in the second half? Is that a good optimistic assumption here?
I think the high probability exists that the Aramco issue will come in calendar 2018 itself. Now, what I do expect is, the IPO size itself to be ramped up, which is why there is a delay. But it would be a good educated guess that it would come in the second half of the calendar year rather than immediately now.
Right, again, so basically expect the huge IPO for which, again, everybody actually looking at oil prices perhaps in the second half of this calendar year. From there, let's also talk about the precious metals here, because there has been very interesting moves on the dollar here, and correspondingly, again, the gold and silver prices have also actually been moving higher. Dollar index again basically from about 1991 couple of weeks back actually has been trading around 88, 89 now. So there has been weakening in dollar, there has been surge in euro, surge in pound, and correspondingly gold and silver have been holding out about $1,300. In fact, now around 1,350. Around those levels again basically gold has been trading. Today it's looking like a weak day for gold and silver. But Vijay, what do you make out of the strength of gold and silver? Two parameters: weakness in dollar, can it persist? And number two, with the rising inflation outlook and also rising interest rate outlook, do you think that gold perhaps is set to outperform in the first half of this year?
I would agree. I would also, if you permit me, bring in a third factor into the equation: cryptocurrencies. Now, cryptocurrencies have basically seen some kind of safe haven buying from the unaccounted wealth or off the money, or what we call in India black money. Now, with cryptocurrencies showing the kind of volatility that they have in the last few weeks, I think safe haven buying or flight to safety is likely to come back in gold the world over. So any kind of adverse volatility moves in cryptocurrency is a direct benefit for gold prices, which is why I would absolutely concur with your view that at least in the first half of the calendar year, gold prices are likely to outperform.
Right. So again, that's actually the impact of cryptocurrencies again, which we should also acknowledge here. And also, David, basically, if I want to ask you regarding, and I'm now combining both of the aspects here, base metals, precious metals. What do you make out of the recent strength in base metals? On one side, we are talking about the rising inflation, the sort of recovery in terms of demand outlook here. Base metals, basically, what's the pricing scenario looking like? Are you looking at any sort of increase in demand on the discounts on base metals from China? Or you think that perhaps at present it's looking like a very good demand scenario, and also prices perhaps could be improving? Because if I just state three aspects here, number one, again, aluminum premiums, those have improved. Zinc, again, basically has improved. The smelting, the refining sort of charges, those actually have also improved. So broadly, it's looking like a good time for entire base metals and precious metal sector here.
Oh, look, yes, you're certainly right there. There's no doubt that one of the key factors that's influencing the base metal prices has been the accommodating US dollar on a downward trend over the course of this year. So that's certainly helped. The other factor that's come into play is that global markets now are looking more and more in terms of synchronized growth, as we've talked about just a few moments ago. And with that, we would expect to see a much higher demand for commodities going forward. And the final factor is that inflation, yes, it is coming back into the system. And where there is inflation, that is very good for physical assets such as commodities, because it does mean that there are price rises coming through the system. And those price rises generally stem from rising commodity prices. So overall, as long as we don't see a rampant increase in US interest rates over the course of this year, and also with that perhaps a rampant rise in inflation, if they can be contained and rise, let's say, moderately over the course of this year, that's going to set the framework for a very good year for commodities.
Well, thanks a lot, David, for those insights. We're going to slip into a short break, but stay tuned, because when we come back, we're going to discuss more strategies, more outlooks on commodities and currencies. Stay tuned. Welcome back. You're watching the Commodity Trade. Now, before we actually move forward on our conversation, the ongoing conversation with actually Vijay Bhambwani, let's first take a look at the markets right now, which actually are providing the interesting second half move now on the downside here. We actually saw that after the first 2 hours, the market was moving sideways, trying to consolidate. Now, actually, if we take a look at the graph here, that is telling you we actually are hitting new lows here for the day here. Almost 1.2% down, 120 points down, and we are moving towards the very close. In fact, the next support, the very important support of 10,280, perhaps the latest low, the recent low again, is one level again where traders are actually eyeing very, very closely in terms of what sort of support that level could provide, and or after that, perhaps we could be trading at 10,000, 10,100, where the next level of writing actually has been seen. Bank Nifty again basically is the one again which is leading this down move here, 1.3% down, almost 24,840. The next level of good writing or good support is being seen around 24,600. So perhaps potentially a threat of 200 points more again if this sort of selling in the PSU banks again it persists here. In terms of Bank Nifty, very notably, we should actually also know that how are the PSU banks doing right now. PNB almost 9% down. That again is a big cut on PNB here. 115 right now. Bank of Baroda 8% down. Canara Bank 6%. SBI another 5%. So again is the PSU banks, Nifty PSU Bank Index, which again basically is leading this fall here. Let's bring the Nifty PSU Bank Index also. That will tell you that is actually one index which is single-handedly actually pulling down the market. But apart from that, due to sentiments again broadly, there is good selling which is happening in the other parts of the market also here. A lot of selling basically is also being led by Tata Steel, SCL Tech again, and also Bharti Airtel. Bharti Airtel down 3.5%. But Tata Steel, look at that stock. There is very sharp cut in that stock. In the morning, we were telling you that perhaps this is a very aggressive purchase by Tata Steel and it's going to raise question mark on balance sheet here. And again, the market has given the verdict. It's looking like a very aggressive purchase to the market. 7% down the stock is trading right now. So again, that basically is also the point of selling which is coming from the metal counter here. Sun Pharma also trading 3% down. Broadly, it's a weak market breadth. Mid caps, small caps, they're all trading weak. And again, the selling is actually coming from broadly financials, a bit of OMCs, because again, OMCs are also trading weak, 2% down. A bit from the steel counters, all steel counters are trading in red here. So again, that's the major reason for why the markets are trading in deep red right now. Now, let's from the markets, let's turn our attention back to our conversation with Vijay. Vijay, the question here is, we were discussing all commodities here. Now, the question is, in base metals, if I look at the markets and I notice actually zinc basically has again actually moved to the recent highs here, trading very strong, about $3,500. If I look at the inventory data, the recent LME inventory data, that doesn't tell me any major sort of striking cause of worry here. If I look at the positions here, broadly the hedge funds actually, they're not actually sort of any sort of panic selling mode or profit booking mode here. So why there is such a strong confidence here? And number two, what do you think basically? What could be the levels we could be seeing in the next few months here?
Piyush, since Diwali itself, I've been telling you 2018 calendar seems to be the year of hard assets rather than financial assets. So what you are seeing is a weakness in the dollar, and let's not forget, hedge funds normally tend to stay in the market. All that they do is shuffle the deck, move their cards from one asset class to the other. Now, if you're seeing what's happening in the auction houses all over the world, big money is finding places to hide. So you're seeing art prices or old vintage racing car prices simply go through the roof. Money is finding places where it can hide. And during high inflation and especially volatility in the fiat currencies, it is hard assets or metals which are more honest to the investor as compared to paper assets. So what you will see is that led by copper, which is the bellwether tin roof of the economy, or if you want to call it Dr. Copper as traders call it, it will tell you where base metals are headed. And copper seems quite firm, and it does seem to have legs to move up from here. The second metal that I have been talking about since the last 2 quarters has been nickel. It's been moving up leaps and bounds from nearly 560, 570 odd levels in June 2017 to almost 900 plus or minus 10% here and there levels. I do think nickel also has legs to move up from here, and the downside is likely to be capped by 8 to 12% max. We've added zinc to our radar right now, and it's there on our gun sights. I think zinc is looking like it's likely to outperform its peers in the non-ferrous metal space. So that looks an interesting counter, but I haven't bought into zinc at this point in time. We are still seeking fresh entry points, but it does hold promise as of now.
Right, and I want to ask you more on the nickel here. Is that on one point, again, if I'm looking at the data here, nickel prices again basically are trading almost close to 3-year high. We would be just falling short, almost 32, 33 month high again, where actually nickel prices are trading right now. There has been some increase in net long positions, especially basically what actually the Shanghai investors they have done. But what's your take on actually what we have heard from the supply heads coming from the Brazil's producer Vale? And number two, again, basically, what actually could be the impact from the resumption of exports from Indonesia? It has been multi quarters of the wait from the Indonesian in terms of export perspective. So on one side, I'm talking about the supply hit here. On the other side, there could be perhaps more supply coming back into the market here. What could be the impact of that?
Well, this is a very interesting analogy that you've drawn out. On one hand, Indonesia, which can be, yes, a swing producer and therefore a price determinator of nickel prices. But let's go back in time, say about 6 months ago, we were talking about electric vehicles and alternate renewable sources of energy, and there was this buzz about the best days of crude being over. In spite of that, crude is going up. So fundamentals are one thing, sentiments are another. They need not go in the same direction. So on one hand, there is an overhang of supply on nickel, but on the other hand, there is money waiting on the sidelines, finding places to hide, and during times of uncertainties, hard assets tend to see more confidence-based buying, purely because of A, safe haven buying or flight to safety, and B, as we've discussed, higher inflation typically means core inflation or WPI going up, which is led by base metals. So you can say that supply overhang exists, but I wouldn't be surprised if nickel goes up from here.